If you're looking to buy a new home before you sell your current one, you have come to the right place. Today, we're going to be reviewing 3 different options on how you can do so. So before we dive in depth, here are the 3 options that we'll be reviewing today. Option 1 is qualifying for a regular conventional mortgage and then recasting, which we'll explain later. Option 2 is getting a bridge loan for the down payment from your current home in order to buy your new one. And lastly, a true bridge loan where the loan is cross-collateralized, aka put on your current home and your new home. Benefit of this one is you only have to qualify for the new estimated payment, and we will ignore your current one. This is the most unique option we have, so make sure you watch until the end. Option 1, the first option is the easiest to coordinate, but you do need the income to qualify for the new and current home before you sell. And you'll also need your own down payment from out of pocket. Once you sell your current home, you can request a recast on your loan, aka recalculate payments. Let's look at an example. So let's just say you're buying a $700,000 home and you decide to put 5% down. You can definitely put more down, but 5% down is more feasible than 20%, especially if you haven't sold your home for a lot of people. That leaves you with an initial loan amount of $665. Let's just pick a random number and say the equity or profit or proceeds from your current home sale once it's sold is going to be $300,000. Once you sell your current home, you're going to have to decide, hey, what do we want to do with that $300,000? In this case, let's say you take $35,000 to replenish your savings account since it came out of your pocket, and then you apply the other $265 towards the loan. You are allowed to basically request the recast or re-amortization without having to refinance. What this does is it makes sure your payment is going to be based on the $400,000 loan amount versus the larger $665,000 loan amount. Your payment's going to drop. Now, again, you can always actually pay extra, but if you pay extra and don't request the recast, your loan will be paid off sooner and your payments will be unchanged. Note, this is available on all conventional loans and some jumbos. Not all loan types qualify. The second option we're going to look at today still requires you to qualify for your current house, the new house, and your new bridge loan. The bridge loan in this second option helps cover the down payment on the new home and comes from the equity on your current house. This is good if you have the income to qualify for both properties, but you might not have the down payment handy, or you might want that cash on hand to maybe covering moving costs, repairs, furnishings, etc. Let's look at the same example, $700,000 property, same down payment, 5% down. In this case, that $35,000 is coming from a bridge loan or second on your current property. Once you sell your current home, any old mortgage as well as the bridge loan will be paid off at closing. Again, if you decide to do so, any extra profit from your home sale can be used to recast or recalculate your new loan, so your payment once you sell your home is based off that smaller loan amount. Last and definitely not least, we're going to look at a true bridge loan cross-collateralized. First, you only have to qualify for your new estimated payment after your current home is sold. So this is the big benefit. Qualifying for the new estimated payment will ignore any mortgage on your current house as far as qualification goes. The loan is applied to both homes, and it's using the equity from your current home as collateral, basically the down payment. This is the best option if you can't qualify for both properties at the same time before selling, because we're looking at what is your situation going to be once your home is sold. That's the focus of this loan. A few notes on this third option. Right now, we only have this in Arizona. We hope to have it in other states down the road. You do need 25% equity between both properties, but that still leaves you with an opportunity, assuming you have enough equity, to come out of pocket with nothing down on the new one before your home is sold. We'll go over an example on the next slide. And lastly, because we're using the equity on your current home, we're going to have to get an appraisal on your current home and your new home you're buying like a regular mortgage. So here's the bridge loan example. Let's say you currently own a $600,000 property with a smaller loan of $250,000. Maybe you put a lot of money down, you bought it years ago, or you've been paying it down over time. So this means you have $350,000 in equity. That's the $600,000 value minus the $250,000 that you already owe. So with that $350,000 in equity and the 25% equity calculation I mentioned on the previous slide, this program will allow qualified buyers to have up to $1.4 million in property between both properties without anything out of your pocket. This basically leaves you with the ability to buy an $800,000 home with your current home as your down payment and nothing out of pocket. Now, once you sell your current home, like the previous loans, you are allowed to request a recast, which in this case would be roughly a new loan of $450,000. Again, ballpark without closing costs or anything like that. Note, if you do want to buy a home larger than $800,000, in this example, you are allowed to do that. It would just require money out of your pocket. At the end of the day, this is a great opportunity for people that want to buy their new home before they sell their current one, and you might not have enough income to qualify for $1 million loan. Qualifying for a $450,000 loan versus a $1,050,000 loan is much easier. At the end of the day, you definitely want a knowledgeable mortgage broker in your corner. Please set up a time if you want to review custom options with us or get qualified or run any type of scenario or numbers that you'd like. I appreciate your time today. You can set up a time at calendly.com/modernhomelending or give me a call directly, 602-456-2273. Thank you.